Now, you use the term corrosion in your subtitle, Information Technology and the Corrosion of Competitive Advantage. What do you see as the corrosive parts of IT today?
Well, the corrosion message is an example of what I meant earlier when I was talking about how I look in the book at some broader impacts of information technology. And so it's interesting as we see the progression of commoditization through the IT world. You can trace it from, say, hardware, fairly standardized hardware, to more complex hardware, onto software, again, fairly simple software, and then to more complex enterprise applications. The interesting thing is that now we're seeing it extend all the way into processes. And so for very
Now, when you say processes, are you saying that business processes and activities like business process outsourcing are commoditizing services?
I would say they're commoditizing the processes themselves. In other words, once you outsource a process, you're giving it away to a vendor who can do the same thing for many different companies, including your competitors. And so for very transaction-intensive processes, ones that are built, that incorporate IT very strongly, what we might be seeing in the next wave is the commoditization of actual business processes at that level. And so if you're a company that has distinguished itself by being superior on some transaction-intensive process, you could see that, that advantage, that traditional advantage, corrode as the outsourcing of IT processes kind of brings many different companies to competitive parity.
Now, you say that IT is closer to the end of its build-out than it is to its beginning, and that's a sign that things will become more commoditized. Don't you think there could be another phase of IT that could resurrect it into more of a growth mode in a way that could compare to 20 years ago?
Well, first of all, I just want to make a distinction that I'm talking about the business use of IT as opposed to the consumer markets. I think the consumer market for IT is probably on the verge of all sorts of innovation and advancement. But I think, if you look at the business world and how businesses use IT, and it's fairly, in many ways, it's fairly prosaic. I mean, most companies share a certain number of processes that they use to gather supplies, to make their product or service, and to deliver that product or service to customers. And I think a reality of the application of IT to automate those processes is that diminishing return sets in very quickly. So, the big gains, particularly productivity gains, come from fairly early on versions of the technology. It may take quite a bit of time, and it usually does, to change your organization and processes to take advantage of those technologies. But once the process has been automated, the additional returns from new advances in that process automation go down very quickly. So I think we'll continue to see infrastructural innovation. I think that the IT infrastructure that's shared by all companies will become more robust, more reliable, more efficient. But those advances, those innovations will be shared by all companies. They're not going to be able to be held proprietarily by a single firm.
Now, you make some recommendations to companies in terms of how they should think about information technology, how they should spend.
Right.
And in fact, you say they should spend less, they should focus more on vulnerabilities than opportunities. When you say focus on vulnerabilities, what do you really mean?
Well, when you look back and you look how other infrastructural technologies have evolved in their business use, you see that at some point they cease to provide the basis for competitive advantage. They're still extremely important in the sense that all companies have to maintain competitive parity, and usually you have to continue to invest a lot of money. But their ability to set you apart from the pack disappears. And when you go through that process, then I think what we see is that the real managerial key shifts from innovation and capitalizing on new opportunities to risk management, cost management, the more prosaic but very important aspects of management. And so I think a good way to look at it for companies is that you're not going to get a competitive advantage through the distinctive use of IT anymore, but you can certainly put yourself at a disadvantage by using it sloppily, by not paying attention to things like security and other vulnerabilities. So that's what that means.
And you also say that companies should not be first movers in adopting new technologies.
Right, in general. I mean, one thing that Moore's Law tells us is not only that technological capabilities are going to go up, going to advance at an astronomical pace, but also that the cost of those capabilities are going to go down equally quickly. So if you can't get an advantage from the innovative use of IT that you can defend for some significant period of time to pay back those upfront higher costs of being an innovator, then it makes a lot of sense to wait, let the costs come down, let your competitors make the mistakes, take the risks. And as the technology standardizes, becomes more reliable, as its cost goes down, you can get the same level of capability for a lot less money if you just have a little bit of patience.
So you're saying that the tortoise beats the hare in most cases?
Yes, right.
Well, you posed a question in your book where you asked a question, you said, would you rather have a toilet or a computer, an internet connection, or a light bulb? Is that really the right way to frame the question or the problem? It's really not a choice between a light bulb and a computer.
No, nobody's really going to have to make that choice. That was in the last chapter of the book when I look more broadly at our expectations about new technologies and how they tend to outrun the realities. And so, what we've heard a lot, particularly in the late 90s, but we continue to hear it, is that information technology represents the most transformative technology in history. And I would just argue that that's not true at all. In that, if you look at the way you live your life, or you look at the way businesses operate, earlier technologies like electricity, for instance, had a much more dramatic impact. So when I say, if somebody put a gun to your head and said you can get rid of your television, you can get rid of your PC, or you can get rid of all your light bulbs in your house, you'd probably get rid of the PC.
Well, finally, I'd like to ask you about outsourcing and how companies are moving more offshore, becoming more modular, trying to get to a more frictionless enterprise.
Right.
How does that fit into your model?
Well, I think it's further evidence of the commoditization of IT, because what we're seeing with information technology now very closely maps what we saw with many manufacturing industries, say 20 years ago, where the products become much less differentiated. Companies compete on cost, and so they start looking for the lowest cost supply. And just as we saw many manufacturing jobs be transferred to low labor cost countries, we're seeing the same thing happening with IT. And of course, it's the rise of the internet, which gives you the ubiquitous communication platform you need to coordinate that work, that's making it all possible. But I think it's completely consistent and kind of represents the next wave of commoditization of not only of IT hardware, but of software and even now services.
Well, Nick, thanks very much for speaking with me today.
Thanks, Dan. It's been a pleasure.
We've been speaking with Nicholas Carr. I'm Dan Farber. Thanks for watching.